my dance, make it hurt.
Good day, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition, Education Wednesdays. We're here to have a conversation about investing in commercial real estate in all different sectors, talk about what's going on in the market that we're seeing, sharing information, collaborating, creating an environment where we can have a discussion, all for the betterment for us to invest, to gain cash flow, and to support the things that are most important to us, family, initiatives, you name it. So again, welcome. For those who don't recognize me or don't know me from all the other videos, my name is Dominic Green. I'm actually here in Dallas, Texas. I'm actually a full-time commercial real estate professional, managing partner of Atentico Commercial Real Estate Services. So again, my whole purpose here is to provide the information that I research as I'm looking to bring together a group, working with a couple business partners and friends, and coming together and collaborating using group economics and investing in commercial real estate, man, and put our money to work. So one thing that I wanted to kind of talk about today, that I really been, here lately been focused on, because I'm always about looking for where are the problems, and if you can find the problems and create a solution, there's an opportunity, right? And I'm always believing, if you heard from other videos, looking for niches. That's what opportunities are, in my opinion. Not the overall thing, but just kind of finding that sliver, that section that you can kind of hone on, specialize in, I will say, or look to expand on as an opportunity that everybody else is focused on the major thing and the major themes. So one of the things that I wanted to talk about here is affordable housing. Now, like I said before, there's, I talk about multifamily here and there, because I believe that, there's hundreds of people online, on YouTube, talking about multifamily from the value add perspective, or, just in general. So there's tons and tons of group. But, when I'm talking about niches, one thing I wanted to talk about is the affordable housing. Coming out of COVID, we're still in COVID, but, with everybody shutting down and, people being regulated, being at home. And then there was a big thing where people were apprehensive about, multifamily, especially, where they're going to be able to collect their rents, people not being able to go to work. So, with the government providing some support, collections, were pretty decent. Although, your Class A properties did struggle, especially if you're in lease-up phase. They did struggle. So there were some, Class A opportunities, that I came aware of, just by being plugged in a little bit, that actually sold, when people were taking advantage of, just because, they were struggling. And that's all over, it was all over Texas. But one thing that I kept coming back to was affordable housing. So, let's think about what affordable housing is. Typically, this is going to be, people who earn anywhere from 30 to maybe 120% of average median income. So whenever you're looking at a certain area, there's a statistic, especially if you get an OM or anything, or you go to your county website and get, data on and zip codes of what the average income or the median income in the area is. So that number, people that earn, between 30 to 120% of that number, kind of classifies in the affordable housing. Now you break it down a little bit more, roughly 60 to 120 or in some cases 80 to 120% is considered workforce housing. So workforce housing is kind of your your nurses, your dentist, not your dentists, your nurses, the teachers, the EMTs, those type of medical professionals in that same realm. Um, some of your management people, some of your sales people. Those kind of fit into the the working people, the workforce. And then when you get to kind of your uh, 30 to 80%, that's kind of more of your lower income, not necessarily extremely low. Um, those are individuals who, you know, are maybe using assistance. Maybe they're also in, the restaurant business where some of your workers, your people that serve you and stuff like that. So, there's a wide range of individuals in there. But nonetheless, that particular sector, even with everything was going on, they had real decent rent collection. So the people that I've been here, looking to now target that, um, especially because I believe that with um, everybody going after multifamily, so returns have already compressed. So I think it's a good opportunity now to look at affordable housing because with affordable housing, you're not necessarily going to make the high IRRs and cash on cash because really there's a crisis. I mean, um, because of COVID and even before that, you know, wage increases have been pretty stagnant across the board, especially for working individuals, your blue collar, some of your white collar, or in between they call gray collar individuals. So, prices of everything has been going up, skyrocketing, yet the wages for the workers have pretty much went up barely. I mean, you see on the news if you pay attention, people fighting for $15 an hour. You know what I mean? Those individuals, have to live somewhere. So there is a gap, and so you have people spending more than 30% of their income, just to pay rent. So where you're looking at affordable housing, and it's where you have the ability to provide clean, safe housing at an affordable price where people are not spending, 30% of their income. And because these individuals would have to spend, 30% of their income on rent, they can actually afford to buy groceries and do other things, have a little bit more disposable income. Thus, they're able to pay their rent because it's affordable. And especially when you're talking about in senior housing, kind of the same situation where, they're spending more than 30% of their income on housing, but yet, as you get older, you have require more health services. So then you have people making, pretty much life decisions on whether they're going to pay rent or buy their medicine. And that's a pretty tough situation to go without your medicine to live longer in order to have a roof over your head. So affordable housing, just from doing the due diligence and following, I kind of had idea about it prior to, but just doing a little bit more digging and finding the model of people that well, organizations or businesses that want to kind of monitor. So primarily, modeling after Avantha by Derek Carter. That's one of them. Um, and then Turner um, from Turner Impact Capital. That's another. And just kind of seeing, how their metrics are, getting an idea of how to make it work um, to provide affordable housing, which here recently, surprisingly, now you're starting to get an uptick of people starting to look like, hey, affordable housing did really well during COVID and it's been doing well pretty much since then. Now they're starting to pour money into it. But even prior to that, still multifamily has been on fire. People have been looking for value add opportunities. They've been going all up and down the spectrum, looking for value adds. Some people pushing, expectations of rent growth just to make numbers work. Others are going outside, to secondary markets outside the main MSAs, the major politan areas, which have your core centers. So you think of like here in Dallas, DFW, they're going to Amarillo. Some people are going to El Paso. You just got to really understand those markets. So and they're going there for yield. Everybody's chasing yield because, again, some of these people who are investors or your pension funds and stuff like that, have a certain need, a certain requirement of return that they need, so in order to support the goals of paying the pensioners, right? So, or the beneficiaries. So not to get sidetracked, but um, looking at affordable housing and going on about it a way of preserving affordable housing, um, as opposed to going in there bumping at rips to where you're going up to another class, maybe B, um, rather just keeping it affordable. Make the necessary improvements that are more long term, and to continue to just keep it affordable. Not necessarily keeping the rent stagnant, but keeping it towards affordable range, so you're not going up there and trying to get $150 per unit lift. Maybe it's more modest than that. But the key thing that I take away from doing the study and seeking knowledge on that is, to keep affordable housing real affordable, the cost is really in um, your turnover cost. So you want to keep units full. You want to make modest improvements, but you also want to really focus on and drive your operating expenses. And the biggest expense is your turnover cost. So every time you think about it, multifamily, you're only really signing anywhere from, in some cases 3 months all the way to 13-month leases. So roughly you have quite a bit of turnover, and turnover cost. Looking at some of the numbers on these deals that I look at, that's roughly, turnover cost is roughly 250 to 350 per unit. So when you're looking at affordable housing, what you want to do is reduce that cost. You want to keep people happy. And in order to keep people happy, you got to create an environment where people want to live, where they have renter ownership, they take pride in where they live. To keep things affordable, you go in, you don't necessarily add granite countertops, and add the stainless steel appliances. You go in there, you make cosmetic changes, you fix the things that need to be fixed. You definitely want to make sure and focus on any maintenance issues, spend your capital there, and then creating services and stuff at the community. Because you got to think about it, again, if you pay attention to my other videos, real estate is about the people, right? It's about the people. It's about the business. Um, you're providing basically a product or a service in a sense. So without the people, you have no real estate, right? So you have a community, provide the services for the community, and then who people who feel comfortable, they get the things that they need. They're not having to spend an exorbitant amount of their income, which may be little, it hasn't grown that much, on just for a place to live that's safe, clean. They're more than likely going to stay there for a while. So you effectively reducing your turnover costs, which affects your bottom line. You're maintaining on your maintenance. You're not necessarily having to go in and doing so many improvements to the property, as long as you keep maintaining it. And then you can gradually, raise the rents, um, you know, over time, and not something that's a big shock. So you gradually add, um, less than 10% prior to, depending on if you had to make, some capital improvements, you know, your major ones, your HVAC, your roofs, your plumbing, and stuff like that. But like I said, adding the community services, getting people involved, um, providing an environment where people can feel comfortable. And in return, you can provide a market rate return, and especially with, like I said, now with returns are being compressed anyway, because there's I don't know how many people to say, but there's a lot of people chasing very few deals, a lot of money chasing very few deals, and it's just compressing and compressing cap rates. So as one guy said, cap rates for B quality assets, we're trading around, at one point 6.5 cap, and now they're damn near 5. And you got C's doing, same thing. They usually trading somewhere 7 and 8, and they're somewhere in the mid fives. And in some cases, the people are pushing even further and further, and they're getting to sub fives, fours. Um, and then Class A's, they're just anywhere between 3 and something, especially if you're in Austin. It's just ridiculous. So, anyways, not to get on a tangent on that, but you know, looking at the metrics, you can provide a market rate return. So the guys that I'm modeling, they're doing anywhere between 6 to 8% cash on cash, and then their IRRs are anywhere between 10 and say 10 and 12, 10 and 14. It varies, and then there's the long-term holds. Um, but again, the key is, uh, and just me sharing the information. The key is definitely managing and focusing on your operating expenses and creating services, residential services, programs, engagement um, in the community to make people want to stay there. And then for me, it's always about when I'm looking at it, what is the advantage or competitive advantage that my property would have? Just looking at different properties, trying to figure out exactly where I want to be to preserve affordable housing, which is in return for our investment partners preserving their capital and providing cash flow. Because at the end of the day, what are we buying it for? We're buying, we're solving a problem, addressing the problem, and making a return. And with that return, we're looking to fund the things that are also important to us. So whether that's a charity, a nonprofit, your family, um, you're talking about building generational wealth, so forth and so on. Um, having the cash flow to do that in return. So, as they say, social impact. You do good, um, and still make money. You know what I mean? Make a profit while having a purpose, as I would say. Um, so, I think that's probably where, if I was looking at the niches, this is the opportunity for us to look at. I mean, financing from Fannie and Freddie Mac is still decent. Interest rates are still low. Um, Now, the only caveat is you got to be conservative in underwriting because here again, now what wasn't on the radar before is now getting on the radar. So now you're starting to see even more institutional, private that were probably flying on the radar before are gaining more news coverage and stuff like that in the articles. So people are picking up on it and starting to say, hey, well, we're going to go after it too. And then now you have more competition, right? So with the more competition, it takes a little bit longer. You just got to make sure you understand what you're doing as far as underwriting, not to pay too much for a property because you got to make sure you still got to get the returns. Because as you know, as one of the guys was saying, um, you in order to have a sustainable solution to a problem, you got to be able to generate a profit. Um, there's no there's no nonprofit without profit. So um, that's where it comes in. Figuring out what your needs are, what obligations you need to hit, your preferreds or returns that you're projecting to your investors when you're trying to put these deals together, and just staying diligent. Um, listen to these guys. They make offers every day. They probably look at 100 deals or so that come across their desk, and out of the 100 deals, they may at the end of the year or at some point in time get one because they're staying diligent, they're staying focused, and they're staying within their realms of where they need to be, and not just getting into the fear of missing out. Like, hey, I gotta get it. So what I've been doing here is kind of putting together a plan, putting together metrics, looking to see who I could potentially partner with, JV with, and then go from there and try to raise money and while simultaneously looking for opportunities because I've kind of spent the time and narrowing it down amongst all my other obligations that I have. So um, yeah, I think it's real opportunity. Um, there's such a huge gap in the need for affordable housing, um, and even with the um, low income tax credits, those type of developments, they take time, and then there's a very limited amount of resources or credits that states have, and so they're picking projects. You submit your project, and you may or may not get credits because there's a limited resource. So with new construction, man, it just takes time. So I'm thinking There's already product out there. There's already existing um, communities available. Going in, acquiring them, making them clean, safe, creating programs, having the proper management team that has experience and running workforce or affordable housing, and really creating an environment and creating opportunity, and at the same time making a return for your investment partners and keep the business model going. So the good thing is there are models out there. Um, as my friend always told me, find a model. Somebody's already left clues on how to do it, and there's no need to reinvent the wheel. Maybe put a little extra spin on it to make it your way, but other than that, follow the model. There's no need to go through the headache and doing it again. Um, so I think affordable housing is going to be with us, or the need for affordable housing is going to be especially in our Black and brown communities. Um, and it just goes back to the wages issue. Um, and then also you add on top of that those that are looking for homes, to purchase a home. I mean, man, it's very limited inventory, and the prices of homes are just going up and up and up. So you have very little supply, but high demand, and the same thing for affordable housing. There's a huge demand, but very little supply. So if you can find a way to go in, preserve it, provide the housing that's safe and clean, still make a return, you have a long-term investment. And then, like I said, you're doing good at the same time, making a profit. Um, but especially the senior thing, man, that kind of hit me. Um, just dealing with a family, we were talking about looking for somewhere to live, and I actually went to go visit some of these um, senior communities, man, and man, it's really rough in there, man. They're very capital starved. Um, you could just tell, like, I mean, it's just rough, man. So there's a need, man. There's an opportunity, I think, and it's something we can really focus and put our money on. Helping, especially helping our people, um, and putting our money together again, do good, make a profit. Because I know, like, according to one of the websites that I go to, the National Low Income Housing Coalition, they have their statistic about affordable. There's about almost I want to say about a 7 million rental unit gap for affordable housing. I mean, that's a lot of units. Like I said, construction takes time to happen. So, looking at existing properties and not going in there and, jacking up the rents, which, is a lot of people's business plan because they're in there to lift the rents, make the improvements, and they're in and out after 5 years, and they sold it, refied, or whatever, the business plan is. But when you raise the rent like that, you gotta understand that now they're targeting a different clientele, so they're going to displace, some of the current residents. I mean, if you listen to some of these webinar calls, man, they're already telling you, like, when they go in there, they're recrediting the buildings, which means, they're raising the income restriction, the income levels that you need. So instead of 2.5, maybe it's 3, maybe it's a little bit higher than that. They're going in because some of these places are pretty much at 96, 98% occupied. They're looking at, okay, who do we want, who don't want, because we got to get in here and we got to, you know, upgrade these units. Um, we gotta spend this money that we told these people we're going to spend this money on, and we only got a certain amount of time to do it. And so, eventually you got this, you end up displacing those that actually are looking for affordable housing. And those that follow Section 8, there's probably a 2-year waiting list for individuals trying to get Section 8 assistance. So there's just extreme demand, and so I think that's an opportunity for us finding our niche, to go in there, uh, make the necessary changes, create the environments, provide the services, and at the end of the day, still make a return on our investment. Will it be exuberant? No, but nonetheless, it will be it will be incomparable to other things better. And then at the same time, we're still doing good. We're still having an impact, which just adds to it. So didn't want to keep you guys too long. That's kind of what I want to talk about a little bit here today. As always, like, share, subscribe, leave a comment. I do have a Facebook group. Let's Talk Commercial Real Estate Investing, um, which you'll see in the section below of the video. If you scroll down, this channel. So join us. I'm looking to grow the group. Um, Leave a comment. I apologize for not always responding on time. Sometimes I don't get the notification for whatever reason on YouTube. They don't notify me that somebody's left a comment. And when I look at it, it's probably been a couple of days or a week since the last time we posted. So I do apologize for that. But nonetheless, let's, keep the conversation going. I don't know everything, never will. There's just so much to learn, so much to know, especially in commercial real estate with it being so far, vast and wide of sectors and niches. There's never gonna be able to know enough. But that shouldn't stop us from actually taking for what we do learn, leveraging the experiences of others, knowledge based to others who worked in different industries, who worked in certain parts of commercial real estate, all the way from executive management, on the ground, financing, so forth and so on. Because like I said, this is going to be a group thing, and we got to work together. Business is a team sport. No individual is ever going to win against a team. No individual is ever going to win against the system. So we got to come together. We got to work together. Everybody's going to have their own differences on how they want to approach it, but nonetheless, this is an opportunity for us to collaborate, have a conversation, find partners, and just continue the conversation going. Exposing us, more and more about, in my opinion, an opportunity to build generational wealth to help improve our economic situation. And at the end of the day, also have some type of power because we own stuff. Instead of renting, we actually own it. So when you own, you can control, you can create the environment, you can create the places that you create the change that you want to see, in a sense. So, for me, that's all the goal is. Yes, I want to have a group. I want to also, use this platform as a way to connect, to hit the missions and targets that I want to hit, which is to invest in more commercial real estate, and from investing in commercial real estate, taking proceeds and creating private equity and investing in our businesses, because there's a huge gap in that as well, and just continue to go forward from there, because I know there's people out there doing it. It's just about us trying to figure out a way to connect. And I think this is one of the ways, in my opinion, to create a platform where we can have those conversations and connect, share ideas, share knowledge. Knowledge is not meant to be hoarded. There's a reason why they want us to read books, you know what I mean? So now that we have the ability to do all that, working together, we can go fast individually, we can go further together. So until next time, sorry I kept you guys so long. Didn't mean to rant on. Sometimes I get into that when I'm just talking about it. Commercial real estate. So commercial real estate investing nonetheless. So until next time, tune in, share, subscribe, leave a like, join the group. Let's keep the conversation going offline, and happy investing. Deuce.
These my dollars make it hurt.